What's up, everybody? Welcome back to the Crypto Talk, bringing you tools, opinions, and knowledge in the crypto space. My name's Khalil. If you like that kind of information on cryptocurrency, go ahead and like the video, subscribe to the channel. And before we go ahead and go any further, I want to say thank you to the subscribers that have been coming on so far and liking and supporting the channel here. But for today's video, we have lots of uncertainty in the markets, guys. Lots of fear, uncertainty, doubt, institutional manipulation, and we're gonna go over all that here. So fundamentally, nothing has changed about crypto. Nothing fundamentally. Technical analysis wise, guys, which you'll see here later in the video, we might be looking at a bear market, and I don't want to be all gloom and doom, but it's nice to look at the data. The data never lies. So first things about the news, we have Bitcoin Mining Council emerges following meeting with Michael Saylor and Elon Musk. North America's Bitcoin mining industry, BTC, appears to be moving towards greater environmental sustainability after MicroStrategy CEO Michael Saylor brokered a successful meeting between Elon Musk and several prominent business leaders. Michael Saylor tweeting yesterday, "I was pleased to host a meeting between Elon and the leading Bitcoin miners in North America. The miners agreed to form the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives worldwide." Elon stating spoke with North American Bitcoin miners. They committed to publish current and planned renewable usage and to ask miners worldwide to do so, potentially promising. Tesla's decision to stop accepting Bitcoin payments due to environmental concerns may have contributed to one of the worst Bitcoin declines ever. The digital asset plunged 54%, bottoming out around 30,000 just before recovery. Elon was subjected to severe backlash from the crypto community as he just recently embraced it. Right, guys? So weeks ago, Elon going on SNL, Dogecoin to the moon, all this great stuff, right? And then coming out of nowhere with environmental concerns about Bitcoin. You would think Tesla, as a renewable energy company, would have already done this kind of research. You know, just a thought there. But although there was misconceptions about the negative impact of Bitcoin mining on the environment, which are nothing new, headlines about Chinese crackdown on crypto miners in light of environmental concerns have weighed on investor sentiment recently as well. And with that China crackdown, I wanted to pull up this quick article. Bitcoin fell back below 37,000 on Friday. The decline happened after a Chinese government website published a statement summarizing a top-level meeting in which officials called for a crackdown on Bitcoin mining and trading activities. And although people thought this was some very new news, this has been something that China has been doing since 2013. 2013 they banned cryptocurrency. 2017 they banned cryptocurrency. Somewhere around 2015 they banned cryptocurrency. Guys, it's in the last video. Go ahead and check it out. We didn't miss anything about new news there. So in the report, they did say we should be more alert and look for potential risk, according to a statement posted on the website after this meeting. We should crack down on Bitcoin mining, once again, nothing new, and trading activities, and prevent individual risk from being passed to the whole society. This is one of the most high-profile warnings against cryptocurrency, where heads of cabinet-level executive department make national policies. And although, for the people who have been in crypto for a while, know that China banning cryptocurrency is nothing new, on top of the news with Elon Musk and inflation rates rising and just so many things happening in the world, there was a major crash. But we do have Willy Woo here, one of the top on-chain analysts in cryptocurrency, stating that user growth on the Bitcoin network, no coiners, people with no cryptocurrency, are taking this opportunity to buy that dip. In case you're wondering, the bull market is very much intact. So I want you guys to think about it from this perspective. Yes, you are in the crypto market, so you seeing a 50% drawdown looks catastrophic, just terrible. But for someone just entering the market, they're looking at this as, oh, look how much cheaper it's gotten, right? Stating a day later, by the way, a key observation here is that this is not looking like a 2013 double pump. It's so far structurally playing out like a COVID white swan, where people on the sidelines took the opportunity to come in. Other on-chain charts point to the same structure too. So what Willy Woo is saying here, looking at the Bitcoin charts weekly, this is our 2021 bull run. You can see this major sell-off we just had the past couple weeks. This is the 2018 bull run, right? You can see it's just a parabolic growth. It just goes straight upwards. But back here in 2013 to 2014, you can see we had an initial pump from 2012 to 2013. It actually came down about, what is that, 81%, just like we're seeing now, before accumulating for about 4 months, and then we have another parabolic run. What Willy Woo was trying to say here is the charts and on-chain analysis don't show that what we're seeing will be something like this 2013 to 2014 run where it's a double pump. But we're also not seeing this parabolic 2017 run either. Not yet, at least. There was some dips here you can see in between that run, but this could either be a new kind of bull run we've never had before, or this could be the end of the bull run, guys. And I hate to be a bearer of bad news here, but there is some awesome information that I wanted to show you from this guy named 2, Popper on Twitter, right? Now, he's been blowing up the past couple of days because of this amazing detailed script on market manipulation. And I definitely wanted to go over it with you. And here we go. Now, this is a bit lengthy, but bear with me here. You're going to like this. So this guy, 2, Popper, giving some inside info on FUD and fucking with markets by someone who has blood on their hands many times before. This is going to be decently detailed, so sit down, take your time. I'll also add some proof as I dig through some of my old drives without doxing any clients, obviously. First, a quick intro. Prior to my move to crypto, I was a senior executive in the dominant company in one of the most competitive sectors out there. My P&L alone was larger than that of some small nation states. We were also highly regulated with over 125 licenses in 100 jurisdictions. So, good stuff there. In 2016, I YOLO'd into crypto by launching a full-service covering company, legal and regulatory, meh, solidity development, pumping out those shitcoins you all love, marketing and PR, pumping your bags to the moon, and OTC for the smart money to exit with minimal wreckage. Over the counter is what OTC means. In all, we service 50 clients, mostly vanilla ERC20s, but also some early ER721 NFTs, as the kids call them. Back then, we were using them to build stuff like SKRs for physical gold, for private banks, and HK, CH, MC, etc. We also did a lot of sentiment management for our over-the-counter desk. So, say you're a fund wanting exposure to Bitcoin, but you think you missed the optimal entry. If only there was a dip you could enter in. Cue us. What flavor of dip would Sir prefer this morning? Flash crash? Liquidity hunt? Ah, excellent choice. The end of the bull market it is, right guys? So we're going to crash the markets to allow you to scoop up cheap sats, Satoshis, which is how you break down Bitcoin. Step 1, the groundwork. We pay several low-tier media outlets to publish bearish news but not promote it on their channels. It just sits there for now. Step 2. Pay several contributors to Bloomberg, Forbes, etc. to publish hot takes on the story citing the article. It's easy as A, the starving writer meme is real, B, they're desperate for fresh content, C, compensation is tied to the amount of traffic their stores generate. And if we look at this picture here, you can see how much it costs to send one of these articles or have one of these places publish an article out of fear, but just straight fear, uncertainty, and doubt. So you have Bloomberg, it costs $7,500, TheStreet.com, $5,000, Forbes, $7,500. We have HuffPost, 4,000, Reuters, 8,200, and on so, right? You can see how they pay out these guys. So it gives you a little proof behind the pudding. I like that. So now that the content is on some low-tier news sites and a few tier 1s, this is where you break out the Rolodex and ping every pasty tech writer you ever bought drinks for at a conference and FOMO them in. Fear of missing out, FOMO, guys. Yeah, you're now missing the story, dude. It's on Reuters too, FFS. You need to publish this now, is what he's saying. The story starts gaining momentum. It hits the PR wires. It's all on sites from news BTCs to Reuters, so it's obviously legit. Time to break out the CT influencers. These guys all tweet out the story or variants of it with keywords that sentiment algos pick up, such as ban, hack, etc. It's now time to tie it all together by initiating the dump via our algo. This is the opposite of the standard OTC algo. In that, it looks like the thinnest books on exchanges, which compromise feuds, prices, indexes. CB, Kraken, Gemini, COINBASE, and market dumps on them. Retail see the dump, rush to Twitter to find that CT engrossed in this new story. They panic as algos start to dump and liquids begin. Retail sales, cascading SLs, and more liquidity dumps, finishing the job and drive price to your orders. We dump on any rally to keep momentum high. Bingo. Last thing he quoted here was, "That's all for today. I hope this was educational. And when the next perfect storm hits crypto, you'll remember that it's perfect because it's engineered with military precision by professionals, guys." And let's be honest, everything is manipulated this day online, right guys? This isn't anything new. But we also kind of talked about this last episode. Let me bring up some more context. The Richard D. wick-off event, right? I brought this up in the last episode. Wick-off kind of had this idea of how prices range and from when and where, and this is humans creating patterns like this. So we just kind of broke down into this pattern where we were, right? Huge, massive run up before a sell-off, and now we're kind of falling into this accumulation phase possibly. So let's go ahead and look at the Bitcoin charts here. We're still on the weekly, right? Weekly chart is what we're looking at. I have a blue line, which is my 10 EMA. I have the green line, which is our 20 EMA. Yellow is 50, orange is 100, red is 200, and black is 300 EMA. Okay, guys? Now, this is where I wanted to go a little bit more depth. We're going to be looking at the weekly, daily, 4-hour, and 1-hour charts here. So each time frame is going to be a little different. We can see on the weekly, we just had this major runoff crash. Weekly RSI has not bottomed out yet. MACD is still crossing downwards, so it looks like we still have some more downward momentum. We could just be chilling around this level for a while. Monthly chart, guys. Monthly. We are looking pretty bad right now. I'm not going to lie. RSI is still topped out. We could go down a lot further. We've had a lot of pumped up green here. Daily chart looking like it's ready to make a rebound as far as the MACD goes. RSI has reset. So as we talked about before on the previous episodes, looks like Bitcoin just wants to accumulate in this $30,000 to $40,000 range. Anything in between here is noise, right? Until we break above 40,000, 42,000, or break below 30,000, I don't see anything significant happening in the crypto space. That's just my opinion. But as far as data shows that bear market has technically kicked in until something else shows us otherwise. And what do I mean by that, Khalil? What do I mean? Well, what I mean is in this daily chart for Bitcoin, we have our 10, our 20, our 50. Remember, we have all these moving averages. Well, if we go to the previous bull market, which was 2017, we can see when it came crashing down, as soon as on the daily, we have the 10 crossing over the 20, there's a sell-off. When you have a 10 crossing over the 20, there's a sell-off. Right back up here, when you have a 10 crossing the 20, there's a huge sell-off, okay? So it's just a little thing to look at here. And if we go to where we are now, we can see we had the 10 cross the 20. There was a huge sell-off. The 10 cross the 20. There was a huge sell-off. Now we are below. But usually when there's a sell-off, we see a little rally. So what I'm trying to bring to you guys is when we see a rally here, probably back up to 42,000, we might even get lucky seeing about 46 to 48,000. Right? Look for that 10 to 20 moving average or exponential moving average, because we may have a huge sell-off around there. And as much as I fundamentally love crypto, there is nothing that's changed about Bitcoin or Ethereum, Cardano, any of these big projects. Nothing. Fundamentally, they're getting stronger each day, actually. Technical analysis shows us something different. The data shows us something different, right? We're looking at both bearish and bullish signals right now, guys. And I'll be very honest with you. I have no idea which way this is going to turn out, but I do know as long as we're sitting between $30,000 and $40,000, we're kind of just stagnant right now. There's no big indicators to move anywhere. So I'm kind of just chopping around watching the markets, and I haven't posted a video in a couple days, and the reason being is because I've just been watching the markets. The best thing to do sometimes is not do anything, right? Like, you're only going to stress yourself out more emotionally. And if you're using money that you need to pay bills for, stuff like that, that's probably why you're so stressed out. If you have money on the sidelines that you can just toss in and not worry if it goes to zero tomorrow, I mean, if it's like gambling. In gambling, you do strategies in order to win. Same here in crypto land or stock market or any kind of market that you're watching. But to go ahead and end this out here, we're looking both bearish and bullish depending on what time frame you're looking at. If we break it down to the 4-hour chart, we're looking a bit bearish. We actually have this rising wedge, which is a bearish formation as well. So, but it is pushing onward and upward to this significant resistance level at about 42,000. And if we can break above that, then we might be good to go. But let's take it a little bit further into the 1-hour chart. They're actually looking pretty good right now. We might be able to make a turnaround onward and upwards. So in all reality, this is a bearish channel, right? Which means usually you might see something do this and then kind of break down from there. But in crypto, the world of crypto, it's been known that some of these can even break upwards. And what we want to see is break above this level. come back to test it so we can kind of shoot onward and upwards more. That is exactly what we want to see. Now, if we see that other route where it kind of breaks down, guys, should be like a stop loss set around right here, right? Save yourself. Please save yourself, because we could be headed right back down in this direction. I'm fundamentally very bullish. Technical analysis wise, I'm very bearish. This is my first bull market, guys, so I'm new into the world of crypto. I am new into experiencing these emotions and making all this money. You have to understand that if I'm learning this, there's no reason you can't if you're just getting into the market. And as bullish and as awesome as people want to say, go to the moon, it doesn't work that way, right? There's bigger people, there's whales with millions and billions of dollars that push these prices in certain directions. That's exactly what this is. They are the ones controlling the prices. We don't control the prices. We follow the guys pushing the prices. But fundamentally with Bitcoin, it's also a store of value, right? It's meant to get away from inflation and all the things that are going bad in the world with the US dollar and all the monetary processes we have today. So I wanted to show you this awesome visualization of Bitcoin, how much Bitcoin is out there. So for those who don't know, there will only ever be 21 million Bitcoin. Just like gold, there's only so much, which makes gold so pricey, right? The less gold, but the more demand, the prices get pushed up. Gold in the future will be 25, 50,000, 100,000, 300,000. Believe it or not, guys, just wait. Next couple of years, you'll see it rebound gold, but Bitcoin is digital gold. And how much Bitcoin is out there? There's 21 million. Well, how much of it is out there for you to get? Let's check that out. So we have Bitcoin on exchanges. Bitcoin on exchanges. This is on Huboy, Binance, KuCoin, COINBASE, all that good stuff. There is 2,386,000 Bitcoin on exchanges. 1,700,000 Bitcoin that are zombie coins. Those are coins that haven't moved since 2010, including Satoshi coins. So these could be coins that are lost forever, possibly. This was back when nobody really believed in Bitcoin. They just bought a lot of it and they were like, yeah, go up, and then it crashed and all this other kind of stuff. So not only that, it was harder to get back then. It wasn't like you could just pull it up on an app and buy it. You had to like literally go print out pieces of paper, and ridiculous. It was pretty ridiculous back then. Those are coins that haven't moved since then. People who've lost their passwords, all that good stuff. So that's Bitcoin just out in the world. Who knows where, just lost. We have 656,000 Bitcoin in Grayscale Bitcoin Trust, guys. Now this is the biggest investment fund that holds physical Bitcoin. We have 328,500 Bitcoin mined per year, the number of new Bitcoins that get mined each year until the halving in 2024. Then we're only going to get half of that number mined per year. That is another thing that makes Bitcoin such a good risk against inflation, is because this asset doesn't inflate. It deflates over time, which means you get less of it over time, unlike the US dollar where they keep printing it and making more of it and making more of it, which inflates its currency. But we also have 200,000 Bitcoin seized by Bulgarian government, another 194,000 from Plus Token scams. You have some by the Winklevoss twins, 215,000 Bitcoin on Ethereum. That's wrapped Bitcoin. Block one. And then it comes down here to MicroStrategy, how much Tesla owns, Tim Draper. And then down here, this is the rest of the supply in circulation. This is how much me, you, all of our friends and family have. Little guys, this is how much out there we have. And this is what the institutions want, guys. When you see these massive drop-offs like this, okay? When you see something drop, bam, what is that? 20%. When you see something drop from the top to the bottom, 50%, right? It's meant to shake out those weak hands, especially in Bitcoin, right? Bitcoin, there's only ever 21 million, which is why it is such a good hedge against inflation and risk in the future. So this is what the big guys want. They want all of our Bitcoin. They want all this. Do not sell your Bitcoin. Sell other stuff. Don't sell your Bitcoin. Please don't. Don't do it. You will thank me later. And last but not least, we have 2,280,194 Bitcoin left to be mined. The last Bitcoin to be mined will be the year 2140. I know, not 2040, 2140, 119 years from now. Okay, guys? So hard to wrap your head around. We'll get to that later. But this is how much more Bitcoin is left to be out there. So if you already have your Bitcoin, this is how much Bitcoin is left to be fought for. Not a lot. Not a lot by the year 2140. You won't even be alive then. So get as much as you can and hold it. Hold it down. But to wrap this up, I just wanted to kind of go over all this fear, this uncertainty, this doubt, right? This market manipulation, but it's played for a certain reason, guys, right? To Kama Pomper, he talked about this whole thing. This is how markets work. They even pay news articles and have them hold the articles until everything's ready. And then all this massive news comes dumping out. You'll hear news that it's been recycled over and over and over, like China banning Bitcoin, Bitcoin not being environmentally friendly. All these are lies. Don't listen to the recycled news. Don't listen to the garbage. Follow the markets. Look up any articles you can, TA-wise, and just kind of study the markets, guys. That's the best way to hold down your emotions, right? Yes, things are looking choppy right now. We don't know which way this might head out. If we're heading in a bear market, you can short. You can make money going down, all right? That's what happened with GameStop. So don't sell your Bitcoin. Buy more Bitcoin. Buy the dip on Bitcoin. But understand markets. Understand how they work. Understand this isn't just some random up and down motion. This is people pricing things. And that's all for today. So I really do hope this was very insightful, especially this 2 Comma Pomper guy. Go ahead and give him a follow if you're on Twitter. Give us a follow at the Crypto Talk on Twitter. That way we can reach out, talk more about this kind of stuff. But once again, I do hope it was very helpful. I am not a financial advisor. I love doing this stuff for fun, just researching, and it's insightful. So I hope you have a great day, and we'll see you on the next video.